Heidi ho, everyone, and welcome aboard. It is Thursday. We'll stone the crows and starve the lizards. How did we get there? It goes awfully fast, does it not? I'm Jeff. Those of you who are joining us for the first time, I will be joined very shortly. In fact, in about 10 minutes or so, by Ash. Somebody asked the question yesterday why Ash comes in late, and I don't think we addressed that. The reason he comes in late is he's getting the late mail. And what that means is Ash trades the Open of London session, and he listens intently to what's going on around about that time because it does shape his day. He's also getting the heat maps and seeing what's going where because he does like to trade the Open. So we relieve him of his what broadcasting duties until he's got that sorted out. So that's why he comes in just a little bit later. Anyway, in the meantime, we're setting up the breakout trade, which, gee, we could do with a good winner, couldn't we, with the breakout trade? Let's see if today's the day. We might have a look and see if we can set that up right now. G'day, Lewis. How you doing, bud? So that's why Ash comes in a little bit later. He's checking out the late mail, as I call it. Those of you who've got no idea what I'm talking about, the late mail, I think, is derived from horse racing, which is why I know it, because I used to be a horse racing fan. Well, I was never a fan because it cost me shit tons of money. Oh, should I swear? I'm on YouTube. Shouldn't do that. Anyway, that was a previous life. This is the life we're currently leading. Let's have a look and see what we've got today. The breakout of the 3 candles won't be that, nor will it be the 5 candles. It's only 1 candle today. And you can see that that's the one that is forming currently. So not a whole lot of work to do here. We simply have to identify the high and the low of that bar. And that will be our breakout candle. I think we can pretty safely set the low, certainly the entry level. And that will be 138.38. So that will be the entry for the short. Those of you who are here for the first time and got no idea what's going on, I will explain everything very, very shortly as soon as I set this up. But essentially what we're trying to do is catch the breakout of the last 3 bars prior to London session on the hourly chart. Today, as I said from the outset, that will be a 1 bar because the 3 bars are engulfed by that single bar. Bamboo Life. Yeah. G'day, Paul P. Gee, busy day today. It's going nuts here, Bamboo. Oh, crazy stuff. At this point, the stop loss for the short and the entry for the long will be the top of this bar. That's currently at 138.30. We'll round it up to 138.31. But I don't think that'll, well, it may stay the same. I'll put it in just in case it does. If that were to be the case, we can work out our first take profit level, which is essentially the difference between the entry and the stop loss. In this case, 7 pips. That can't be right. No, it's not. Let me measure that. I don't know why these things tell me lies. Kumar's app. I should put Kumar's app on here. Why don't I do that? That's so easy to do. Breakout. Then I don't have to guess, do I? So, except I can't see it because the sun's in my eyes. Price for highest candle 1.3867. Okay, so we will make that 1.3868 because we like to round up to the next pip. 1.3868. That makes a whole lot more sense. And the entry price for the sell, that was with when we were using 2 off. We won't use that. But the low is 1.383, and that's all good. TP1, therefore, will be half of the difference. So 30 pips becomes 15. Our 1.3823 will therefore be our first take profit. The second take profit will be double our risk, which in this case will be 60 pips. And that will take us to 1.3778. Okay, so that hasn't changed. Everything's good. We can just reverse that now because we're only trading that one bar, essentially. And therefore, we've got an entry at 1.3868. We've got a stop loss at 1.3838. And our TP1, of course, we're going the opposite direction, will be 15 above 1.3868, which is 1.3853. I better hurry up just in case this triggers. And TP2, double the risk, which is 60 pips. So that will be 1.3928. Okay. Let's place the order. Hang on, I'll get rid of the EA. We'll go with the long first because we're near there. Again, if you're here for the first time, this is not a proven system or strategy of any kind. So this is not to be traded with any meaningful money on the table. It is in beta test mode, 1.3868. Have I made it? Yes, I have. And 1.3838. So I'm trading in micro lots, guys. And I would suggest you do the same. What have I done wrong? It is a buy limit. It is not a buy limit. It's a buy stop. There we go. TP1 on that, we'll mark that just in case we do get taken in, is 1.38, not 1.3853, definitely not. Why is that like that? Let me fix that for you. TP1 will be 1.15 above there, 83, not 53. Okay, we have been triggered long, so we cancel the short. That's the first thing we do. Don't close. Oh, it's actually cancelled it. I haven't placed it. That makes it easy. All right, where's our TP1? 1.3883. So we'll mark that off. And that's it there. If we hit that, what we do is we take half of our position off. What distracted me then? My phone. Sorry, guys. Yes, we take half of the position off. So we bank half and move our stop loss, same amount of pips, which in this case will be 15 from entry. So we'll move our stop loss up to here somewhere if we're fortunate enough to get our TP1. If we don't, of course, we allow it to hit our stop loss, and that's the way she goes. Lewis, you remember this breakout trade had a high win rate on a particular day previously? Yeah, look, it wasn't a Monday, was it, Lewis? That's for sure. Look, we've got to go through all the data. Ash and I have been, well, I've been pretty slack. And why am I getting all these messages? I've been pretty slack in providing Ash with the data. We'll get together at some stage. Hopefully, I won't promise this weekend. I'm absolutely flat out again. Wednesday's the day, was it previously? Okay, Lewis, that sounds good. I'll go back over that old data and see what we can find. This is a slightly different way to trade it, of course, because we have tried, I think now this is the third method of trading it, but this is basically the way I trade. It's the slingshot method of trading. Did I mention that there is an optimized version of this that Peter, our ATW programmer, has gone through that process, and he came up with a breakout of the previous 5 bars, so 5 1-hour candles. And similar to one of the systems that I was using before, he enters 3 pips above the range of the 5 bars. In this case, it's the same bar today. So he would have entered 3 pips above, which would have been 71. So he'd be in now as well. And his stop loss and entry today for the short would have been 2 pips below the low of the range. So if you want to follow that one, that's got far more data optimized than do we, or than do I. And I'll say we, I'll blame Ash as well. He's not here yet, so that's all. Actually, he just messaged me. I've got no idea what he said. Hang on a second, I'll check. No. That's interesting. Okay, all good, got it. Did you know, I'm sure you did by now, those of you who are studious advocates of trading and trading the ATW fashion would know that we've got our first $1 million winner. Wow, I was surprised at that. And I don't know who it is, but that person is going to be interviewed by Paul Time. Ash will know the time. I don't know the time. It won't be that long after. I think it's maybe 7 o'clock, 8 o'clock, maybe 8 o'clock. But I'll confirm that for you. So if you want to find out what that person has done, how, I don't know if it's a male or a female, how that person has got to win or successfully trade, let me put it that way, $1 million US since they've been trading, that's a pretty cool result, right? I haven't done that, I can assure you. But then I don't put a whole lot of money on the table. That's what I'd be interested to hear, what sort of lot size that person has been trading, and I'll be stunned if it's not substantial. And the amount of leverage they've used to do that would also be very, very interesting. So that interview comes up, I'm pretty sure it's at 8 o'clock Singapore and Hong Kong. If you can tune into that, I think it'd be most definitely worthwhile. Okay, we are about halfway, not quite halfway to our TP1. We'll just relax on that for a while and go somewhere else. Ash will be joining us very, very shortly, I'm sure. Updates you for the week. I placed a couple more orders, guys. Those of you, actually, whilst I'm here, I'll ask the question. Those of you who are in the Telegram group, I post on a Tuesday, Wednesday, Thursday, maybe I could do that on Monday as well, what I'm looking for that day, which may turn into the week, which may turn into the next week, of course, but I don't know if anybody's looking at that or whether it's of any value to anybody. If you could just give me some feedback on that, guys, those of you who are in the room, that would be wonderful. And if you are a member of the Telegram group, then you will know that today I placed an order short on CAD Swiss. Now, this is an interesting one because something that I've been doing for many, many years, excuse me, throat's dry. Something I've been doing for many, many years is trading false breakouts because I love them. And there's a very strong reason for that, because as you would know, most breakouts are indeed false. So what we're trying to do is catch those and turn them into money. Now, the way I've done it historically is wait till price comes back inside the range or back inside a trade line more prolifically and catch it on the retest. And that's all well and good. I still do that. I think that works just perfectly for me. However, there is another way to do it. And I'm doing exactly that process today. Yes, I will, Giray. Yep, sure. And it works like this. When you've got a decisive breakout like this, yesterday's candle, right, absolutely smashed through the highs here. One of two things in my mind is going to happen. That momentum is either going to carry on and this will go and create new highs somewhere, or at least match the previous high, so up to here. Or if this is a false break, it's going to go back to here, back to the trade line. Now, the way I used to do it, and still do, I don't walk away from that because it's still a perfectly valid way to trade, as I said, is to wait till it comes back inside, then retest, then go. But oftentimes it won't do that. It won't give me the lower high that I seek. And this is a way to actually get around that problem. And the way to get around that problem is simply to trade the breakout bar. Now, if it does come back, bounce off the weekly pivot and give me the lower high, happy days, I've still got an entry. But if it doesn't and just smashes straight through and goes down to here, I'm going to catch that false break, and I'm going to catch it here, right? So we've got entry below the bar, the breakout bar, and stop loss above the breakout bar. Does that ring a bell? It's pretty much what we're trading right on the pound. It's pretty much the same thing, except that we are trading one bar only. So it is a one bar false breakout. Now, if the first thing that I mentioned is going to happen, which of course is the momentum of the breakout continues, then there's very little doubt in my mind that will go to here. After a while, it may take a week, it may take a month, but that's what my thought process says. So it's I think a really good way to catch a false break. It may not happen, but if it does, we're in the position to catch it. We don't have to worry about it. We don't have to wait until we get back into here and get a lower high. We just simply trade that as it is. G'day, Ash. How you doing, bud?
I'm all right, mate. Yeah.
Oh, we hit TP1. I shouldn't talk. Put your microphone down, mate. Can't hear you.
Oh, yeah. Sorry, buddy. Yeah.
So we have hit TP1 on the pound, and I haven't taken that off yet. So let me do that.
Nice work.
We're going to hit it again by the look of it. This might be full of energy this morning, mate.
Yeah, well, we definitely got to get together on Sunday, see if we can update this spreadsheet. It'd be really good to know, what's going on with the pound breakout trade, wouldn't it?
It would. There you go. I got the level even. All right. So now, guys, we need to move our stop, right? We took 15 pips, wasn't it? Yep, 15 pips. So we've got to move our stop 15 pips below our entry, which is 1.3853. Okay, happy days. Mate, I was just going through the trades that I've set this morning, but actually I'll do that quickly because I don't think there's any danger of them triggering. Maybe this one could trigger. Dollar CAD was a sell this morning. Now, you've got to believe, I suppose, that the dollar is going to bounce off the resistance area that it's currently at in terms of the dollar index. I'll show you that chart a little bit later, but this bar for me is pretty special because it is bouncing off the weekly pivot. The issue with it, of course, is, are we at the end of this run? The answer for me is I don't think so. We've had one phase, two phases. I think we can afford a third, and I think this level down here is in sharp focus, around about the 122, let's call it 123, but that's 400 pips from where we are. So on the basis of risk to reward, and also the basis we're in a downtrend and we've got a rejection of the weekly pivot and a reversal bar, I know it's the second one, I'm happy to take that trade. Of course, we've got to take profit here before we hit those lows. And if that's going to be the case, that the dollar does at least retrace off the resistance area, which that's a fairly good resistance area as well on dollar CAD. I'm strong the CAD and I hate the US dollar, so there's no reason why I shouldn't take that. It is a setup that I like. So that order is on your screen if you want to follow it. The CAD Swissy order is on your screen. Updating the other two that we're still in. Aussie not doing too much against the dollar. Good news on the Aussie this morning on the unemployment figures. And that should have helped it, frankly, go through Aussie Kiwi and head us in the right direction. Of course, we are in profit on that. We have taken TP1. So both of those trades are trading for free. No issues at all, except I'm a little bit, I suppose you would have to consider that the Aussie news was pretty much priced in because it had been forecast, but it was even a beat on the forecast. So I would expect that we're going to see more upside on the Aussie Kiwi. Not so sure about Aussie dollar, but if I'm right on the retracement that's due on the dollar, then that should be the case. I'll be surprised if it isn't, but then I've been surprised many times before. Right, buddy, that's pretty much all I want to do at the moment. Oh, sorry, Gira, for Peter's breakout, right? So he's trading the last 5 1-hour bars. So it'll be exactly the same bar today because all of those 4 previous bars are engulfed by that one. So his entry would be 3 pips above the high of that bar, and his stop loss would be 2 pips below the low of that bar. But in essence, above the high of the range and below the low of the range. Today it's the same thing, right? So his entry is there. His stop loss is there. 3 pips above, 2 pips under. But here's the thing. The big difference is he is not scaling out at all. He's all out at the first resistance level. Now, for me, that is likely to be DR1 today, I would have thought, because resistance after entry is probably there. But, it's in that vicinity. Would he take 1 pip? Probably not. So I'm thinking DR1 would be his exit point today. On the short, his exit point, I would think, would almost certainly be the low. So first resistance, first support, all out. There's no changing anything. It's just you're in, you're out for full risk, whatever that risk may be. I don't know that he's worked out what the optimum risk is. He may well have. In fact, I'd love to get him on. We'll get him on and explain exactly how all of that works. He's got a marvelous tool, that guy. Geez, sorry, he has created a wonderful set of tools, and I'd love to show you guys. He just blew me away in the trading retreat with what he showed me in that optimization. It was just crazy. Sorry, I have taken up a little bit too much time. Ash, what have we got, buddy?
Yeah, well, no, I agree. I'm remembering Peter's, it was a scanner of some sort, wasn't it? That
yeah, unreal.
Yeah, it was amazing.
Hang on, let me change this parameter and
yeah,
go 10 seconds later.
Yeah,
okay.
It was quite incredible. Yeah, interesting, mate. Do you know what? It's been a bit of a tricky week for me, I have to say. Some things that I've been waiting on. Oh, I mean, I missed something yesterday. I didn't quite get the price on the Nasdaq. Nasdaq did fall. That was probably. I mean, I say it's been a tricky week. There's some things that I picked out and they've done really well, but I've just not been able to get the entries. It's just I've had a. Let me show you some charts, but.
Well, sadly, I've had a loser, but we've got 3 that are running at the moment that are doing okay, but we need 2 of them to do well.
Yeah. Well, I mean, I don't know whether it's kind of week 2 syndrome, but look what happened with the Nasdaq yesterday. I was talking about this getting up to 13,800, certainly on the futures. That was yesterday. It got to 13,788 and just didn't pit me in. So that one had a really nice 200 pip drop after that, which was hard to swallow, but what can you do? So yeah, that one was a missed opportunity. Oil's going in the right direction, but the pound Aussie didn't. That hasn't really kind of done what I needed it to do. I don't know whether there's another opportunity. Let me see. It's a bit of a tricky chart, really, the pound Aussie. When I look at it, it still looks quite bullish in many respects. I think the fact that it's through this level on the dailies is making it a bit more difficult. It looks like that there may well be an uptrend starting. You look on the weekly, and this might well be. I mean, it's not really a higher low, is it? It's just a bit through the closing price, but it doesn't really kind of qualify when you look at the high here. So the pound Aussie has proved to be a bit of a nemesis for me this week, and pound yen as well. I was looking at a potential short, and I still wonder whether that might be on, but You know, some of these have been tricky, and I was just looking at the FTSE, and I was thinking, actually, you know, I'd quite like to short the FTSE, but I've just got a bit of an issue with getting into the downside with the FTSE right now, and there's an obvious place taking a short with the FTSE, which is pretty much where we got to, and I'll show you why it's that area. Actually, you won't be able to see it on this chart, I don't think. Let's see. I'm not sure whether it's, yeah, it would be on this chart actually. You would be able to see it, but there's a little kind of horizontal level that just runs along here, and I was looking at that with a FTSE, and because you know this is pretty close to that pivot, and there's also this trend line kind of running down here as well. So
Oh, love that.
yeah, and I was going to trade that. I was just about to take a short, but I've just got a bit of a problem. I mean, all the news and data coming from the UK right now is pretty positive because of the infection rating is dropped quite significantly, and I just can't.
Sorry, mate.
I just can't find a reason.
I can see a classic slingshot long there.
Oh well, do you know what? I mean, I'd be much more interested in the long because of the news and data, but because of what's going on with the Nasdaq and the S&P, and just a little, and with the bonds as well. You know, bonds keep cruising to the upside. I just wonder whether there could be a bit of easing down. But the way I've decided I was going to trade it, I was about to take this trade before we came on air. But I've decided that even though I think that there probably will be downside, I just don't think it's safe enough to trade it. So I'm staying out the way and looking for the downside so I can get some upside. You know, I'm going to try and buy the market down around about this weekly pivot area. Really nice trend line down there as well. Really good horizontal level. So this looks to me like the buy zone around about the 65.70 level, which is around about 2%. It's about a 2% drop. But the issue is I can't find a reason why the FTSE would drop down 2%, you know, apart from technical. And of course, I might not be party to, you know, every reason that people take any trades. Of course, I'm not. And also with that, valuations have been probably elevated, or they are elevated in these areas. So, you know, that could be enough to kind of like drive the US market down, and if the US market comes down, then the FTSE will potentially follow as well. So I'm kind of on the sidelines. I've as I say, I've had a bit of a tricky week trying to take some trades. There was oil I got into, but I wasn't happy with the price of oil that I entered, and subsequently I got out of it before I saw this really good run. But there is, you know, obviously kind of trades on oil to the upside is fundamentally speaking, again, you know, that there's
the
every
birds are singing, aren't they? Really,
they really are. And you know, I looked at oil yesterday in some detail, and when I looked at this point here to where we are now, and it's not the pips, it's the percent gain. It's up over 800%. Since the start of April. I mean, that is just an astonishing number when you think about the time that took to get that 800%. And it's one of those that you just sort of you recognise really here that the people that were in the best position down at those lows weren't people that were in the market. It were the people that had been saving and had some genuine cash behind them. You know, I've managed to take advantage of some of the stocks that were down at the bottom, but I didn't have the kind of capital that I would have liked to really enjoy it. And you know, these are the times, and it's really interesting, isn't it, that the time that you really make money is when there is out and out fear going on. You know, when it's when the market is done what it's done with the rally, there's still opportunities. There's no doubt about it, but the opportunities are a lot lighter than they were. And this is the thing. I would really like to wait for, you know, a genuine move to the downside before I get involved. I don't think we've seen that. Even when I look at the Nasdaq, you could argue here, which is back in September. That was probably the last half decent opportunity to kind of get involved in the market. Actually, that is a good opportunity. But really since then, I don't think there has been. I don't really think that there's been a decent opportunity to really get into anything with any real value. The FTSE 100 is exactly the same. You know, the FTSE 100 also saw that kind of back in September, I suppose it was as well. Oh no, sorry, that's on the weekly. It's here. That's the start of the year. The FTSE, I suppose, at the start of the year, you could say, but the FTSE hasn't really. There's not been a huge amount of opportunity ever since the low. Oh no, this is it here. That was the last one. That was October, sort of September, October time. So that was there's been two opportunities that I can see this year where people would have made some really good money, and they of course happen throughout the year. But you know, I'm waiting for it because of the seasonal bias that we tend to get, you know, right up until around about the middle of March. So I'm reticent to go long with some small retracements, but by the same token, I'm not sure what's going to push this market lower. There is there's a couple that are really interesting, and gold is definitely of interest. When I look at gold, where are you? It's here. Gold is definitely of interest. You know, this is a genuine.
Once again, the birds are all on the perch, and they're all starting to sing.
Yeah, with gold, it's one of those that you know, when I look at this chart, this is where I start to say, okay, now gold is providing a genuine opportunity. There is enough reason to try and scale in. Now we know about the dollar. We know what's been going on with the dollar, and the dollar's had a really good boost recently. And really, what I'm waiting for with gold is I'd like to get a little bit more than, because the problem is we're early. You know, we start taking these trades with gold. We are a little bit early because the fundamental hasn't really genuinely changed just yet. And some really interesting articles have been floating around where people have some of the pension companies have been writing about the fact that they are protecting the price of gold and silver from going higher when we saw, you know, the demand kind of pick up, particularly in silver, when we saw silver rock to the upside in the way that it did. There was a lot of selling pressure, and the reason that's been coming, it's been reported, is because they're protecting the funds. Now that doesn't say that they are buying something because of its intrinsic value or because of what the value should be, and that's kind of, it's kind of underhand, you know, when you think that they you know, they've basically come out and openly admitted that they are manipulating the price. Yes, the price was.
Sorry.
There was a report. I can't remember the guy that wrote it, but there was a report that some of the funds have effectively said that they are protecting the pension companies and the hedge funds.
Oh, okay.
By selling ETFs.
A bit of insurance.
ETFs.
Yeah, okay.
Yeah.
Or hedge, if you like. That's what they do.
In a way, yeah. Yes, it is. Yes, it is. But you know, it makes it very difficult because, you know, you're up against something which isn't a market force. You know, it's not the market force which is doing this. It's not the price of silver. You know, sorry, the value of silver, which is dictating the price. It's horseplay, which I suppose, as you say, I mean, that's what they do, and that's what everything ends up being, to a degree. But there is a great deal of horseplay going on with this, and it's going to be difficult for that reason. But I am now looking for the fundamentals to change in some respects. So I want some kind of hint from the COT report, or the seasonal aspect is fine. You know, if that's sort of like, if the COT report starts to suggest that there's a bit of buying and the seasonals start to then, you know, fall into line around about again back in March, then I'd be quite happy to start looking at gold. But at this and obviously we got this inflation picture which is starting to pick up. I wonder whether that is it $1.9 trillion? I can't remember what the number is now. Well,
that's what they were saying. Mm.
So I wonder whether that might be a trigger. You know, when that actually finally gets released into the market. So I wonder whether that might be a trigger to take gold higher because of the potential inflationary picture, and also, you know, if we look at the bond the bond situation, and people were asking about the bonds. What it's going to mean is that government is going to effectively owe more interest on the repayment, which is, again, this is what will lead to the inflation picture. This is what will start to drive that inflation picture. So all this stuff is starting to kind of get really interesting and really interlinked. But I think bonds were up yesterday at 1.2 1.26. I think they currently sit at now. I said the figure that I started to get interested at really at 1.5. So we're a little way off that, but we're edging there. We're edging higher and higher, and that's another reason that the stock market could start to ease to the downside. We start to see those bond yields move a bit more significantly higher, which means that government debt is going to cost them a lot more money, and inflation starts to kick in. That's going to put some interest in gold, and that'll put some interest in probably the financial sector as well, in the stock market. But I think that there are many others that won't benefit from that kind of thing. So I don't know whether we're in a bit of a transitory point here, mate. And really, when it comes down to it, I suppose it's one of the best times to start buying when the news hasn't yet been released. But is gold here yet? And it could be. Maybe this is a double bottom. And let's have a quick look at a tool to suggest whether there is a double bottom coming in here. So let's have a look at an RSI on this. I'm sure that'll be enough. Not really. There's no divergence here that's going on. There's no divergence here, and I suppose this is what could cause a little bit more downside. If this starts to diverge, what this is suggesting is that there needs to be another rally with gold, and then another pop down. And on the other pop down, if we see some diverging momentum between the indicator and the price action, then another low would be where I'd be interested. But maybe here is just a little bit early. And I think this is the some of the issue is that there's some good ideas that I've got some ideas that I'd like to implement, but I'm just not getting what I need. Didn't get the price on the Nasdaq. I took a bad entry on oil, and I don't really want to take another bad entry, which is maybe why I missed the Nasdaq. I wasn't really up for taking a bad entry, so maybe I'll just set it up just a little bit higher for that extra protection. But inevitably, that just it never works out that way, does it? The market never does the same thing twice. So
Ainsley's always an advocate that that gold loves levels, and she always points to pivots. Well, not always. So maybe that's the story. Maybe you're looking for a pivot, and I don't know what pivot she uses. I think she uses EMAs as well, doesn't she? Or moving averages.
What? Sorry,
I'm not sure they're EMAs.
Yeah, she does. Yeah, she does use the moving averages. You're absolutely right. Well, I know Ainsley was talking about the 200 period moving average not that long ago. So I mean, we'll bring that in as well and see whether that's got any validity on the daily. She was looking at the 4 hourly before. But let's have a look.
Have you ever used it?
Moving average? No, I don't tend to. I'm not saying that they're not valid, but no, I don't, mate. I don't use the moving average. So the 200 period moving average. I probably should put it on my chart, to be fair, because I think that it is a valid moving average, and probably the most valid moving average.
Yeah, a lot of people like it.
But it's one of those things that I would certainly use it if I was trading with somebody who showed me success, that they were using it successfully, much like you did with the pivots. The pivots I pay a lot more attention to. It wasn't really part of my arsenal before, but it is now. I'm much more interested in the pivots now because of us trading together. And
intraday, they're invaluable. You got to have them on there.
Yeah. But you looking at the 200 period moving average here. We got the weekly is way down at 1500, which is a really interesting price point, actually. The monthly is way down here at 1200, but the daily is we're actually below that daily. So it's possible. And what's that? 18, 20. We're currently at 17. So $40, it manages to pop up, but you might have to give up $40, $50 on the price of gold. But that would be okay, because when you look at this in the big picture, if you pick up gold, let's say you pick it up here at 1840. So we're looking at a $60 rise, which is around about 0.8% or something like that. So you're looking at a potentially near 1% rise in gold. But when you look at this on a monthly, it would still be a good 10% from the top. So that would still be an okay price to try and pick it up at. And this is the other challenge with this as well, isn't it? Is that there's one thing trying to pick the bottom and getting in, because this has been proven as a bottom before, which is a valid way to trade, no doubt about it. It's one of my favorite things, picking a level and trading at that level. But there is something else where you kind of go, well, I might need to see some of the smaller time frames actually give me what looks like the start of a trend from this particular point, because this still could come down a bit further. It's still got a few different levels and a few different trend lines that it might be respecting. When you start to kind of like blow out the picture a little bit, it might be this one, it might be this one here. There's a few different areas. It could be the closing price.
So
but I'm wondering,
would you use, and I don't know what you call that system that you use, but you've got let's say you've got an overall 1% risk. And you want to enter at the first trend line for your first position, second position's at the second trend line, third position's at the confluence there of your 200 and third trend line. Would you consider that for this?
Yes, I would. I would definitely consider it, because I really like the look of gold. And so what I want now, because I've got a level, I've certainly got a level down here, but what I'm really looking for is a reason. And I suppose at this stage, I don't think there's if the reason is there for the catalyst, I don't know what it is. Similar to with the FTSE, I don't know what the catalyst is to drive this lower, which is why I can't trade it lower. Where I'm finding it really difficult to trade it lower at this particular stage. So I'm looking for the catalyst, and as I say, the catalyst could be the COT data just picking up a bit with the seasonal pattern. That would be enough of a catalyst for me to see gold prices go higher. It could be a really big print on inflation. It could be the bond yields popping up to 1.5%. Stuff like that would probably get me interested.
It begs the question, doesn't it? What happens next? We're out of Brexit almost, kind of.
Yeah.
We got rid of Trump. We've got COVID on the run, perhaps.
Yeah.
And that's still the question mark, I suppose.
Yeah.
Where are we headed in 2021? What's the big news, or don't we know it yet?
Well, mate, I think where we're headed is inflation. I think that is the big news. I think that when we kind of when we think about the amount of spending that has been done, I mean, is there any way that you can produce this much fiat currency and there not be a spike in prices? They've printed and printed and printed, to the point that surely they're going to end up choking it. There must be a point where you say that, well, enough's enough, too much. Because the thing is, they can continue to borrow. The government can continue to borrow, and they will continue to borrow while rates are low. But we see that bond yield pop higher. Then the government starts to get under stress, and they will have to pay that money back. The Fed have obviously bought a lot of the debt from the government, but they're not the only client that are involved in that. We know that there is.
That's my question. Who owns this debt?
Well, the Chinese will be party to it as well. They'll have some of it. Obviously the Fed own quite a lot of the debt as well. So the Fed maybe a little bit easier, but the Fed are meant to be independent, which is hugely questionable with what we saw with the Trump premiership and how Jerome Powell seemed to react to exactly what he wanted. So There's those that there's City, the City as well will own some of the government debt. So there are kind of clients out there that will want their money back.
Mm.
And what happens then? Because you'd have to say that the inflation story will have to come in. They're going to have to raise taxes and everything else that follows. So this is where fixed assets, and I suppose back to your thing about we've had Brexit and whatever else. The things that tend to do well during these kind of times are fixed assets. So things like oil, a commodity like oil, gold, silver, housing. These things that are ways that you'd certainly want to be protected in this market.
Yes, they're hedges against inflation. Absolutely.
Yeah, but they are, and you can still go and enjoy, taking some risk, because there's no two ways about it. And I would have thought, obviously, cryptocurrency as well. The really interesting thing about what we've seen so far.
You got to throw it in, haven't you?
Yeah, because we've seen gold and silver both really kind of well, maybe less so silver, but we definitely seen gold just retracting and retracing. But we've seen Bitcoin and Ethereum and the like going in completely opposite direction. And again, I find the Bitcoin and or the crypto space just incredibly concerning. To try and trade. I don't find it a concerning story, but I find it a really difficult. Yeah, Helen, the crypto millionaires, and you know what? It's many of you know that one of the cryptocurrencies that I was kind of really exposed to a couple of years ago was ADA. And ADA, I was looking at it. Now I looked at this, Jeff. ADA this year, when on the April lows. Now, have a quick guess of what you think it was worth on the April lows.
Well, I don't know what it was worth in the first place, but I'm going with $4.
Okay, great. Okay, so ADA was worth two cents.
Oh,
so 2 cents.
Okay.
Now have a little guess where it is around about now.
100x, it would be $2. So let's go with 1,000x, $20.
$20. Okay, it's not that
Not that good.
No, not that good. Maybe my story's not quite as impressive as I thought. It's at $1. Pretty much, it's at $1.
Well, there's not a lot wrong with that.
Well, no. Well, this is the thing. Helen's saying about crypto millionaires. But ADA is up by near enough 4,000%, or whatever it is. Now, if you'd had enough confidence to put 20 grand in that, then now you would be a millionaire.
But why would you have enough confidence to do that?
Well, this is the thing, mate. A friend of mine was buying this. I mean, he put in. I can't remember exactly how much, but I spoke to him the other day, and he's now got $150,000. And he's a guy that he's not flush, but he's been buying this thing for years. He's been buying it up and buying it up and buying it up. And yeah, that's what I thought. Great. He didn't buy the lowest possible price. He's been accumulating, and so he's paid a little bit more and a little bit less or whatever. But he's managed to kind of turn something very modest into 150 grand, which is just brilliant. And when you think about the kind of gains, even if you bought this thing 5 years ago, to go from let's say 10,000 up to 100,000, there's just these asset classes just never. Well, these asset classes do exist, but not to the general public. Then they haven't been sort of like so exposed. The general public haven't been as exposed to this stuff as they have recently. And okay, COVID really helped this stuff. COVID has helped these penny stocks, if you like, and these penny cryptocurrencies really start to rocket, and it really has made some as Helen says, some crypto millionaires. But this is where you start to recognize that if you don't have savings in the background while you're investing and while you're kind of putting money in your risk assets and your hedges, then you may well miss the boat when it really starts to come down again. And who knows when that happens? To a degree, COVID kind of came out of nowhere. Now, the reason I say only kind of came out of nowhere is that the business cycle was long in the tooth. And these things do tend to happen once every 10 years or once every 10 to 12 years or
Well,
eight.
the scientists will tell you this has been coming for a long, long time.
Right.
So, forget the cycles of anything.
Yeah.
Well, maybe not. Maybe pandemics do come in cycles. In fact, hang on a minute. I believe so much in cycles. I'll tell you now that you look back and I'll bet there was a cycle where there was a pandemic.
Yeah, quite possibly. But you look at this, mate. This was really the last genuine move in the Nasdaq, and that was the 2008 2009 crisis. So, if we think that these things do happen, once every 10, 15 years, then really when we looked at COVID, it was getting to the point where we were waiting for something. We didn't know what it was necessarily. And I'm not talking about COVID. I'm talking about there was going to be some sort of financial shock. There was going to be some sort of shock, when we kind of got into the end of really the end of the last decade. There was going to be some sort of financial shock because they tend to happen once a decade. Now, what that suggests is the next one may not be, we may not see the next one until the 2030s. But who knows? Nobody knows when the business cycles kind of start to change a little bit and how much more ferocious and how much more regular they become. But I remember an interview with I don't know if it was George Soros, but it was somebody in Davos, and they effectively said the age of the recession is over, and it was within 3-4 months that we had COVID, and okay, the recession was incredibly fast, but we had one. And now we're kind of we're back in the kind of in the mud, if you like, again, because what I find really interesting about this particular scenario is that the Fed printed money and bought an astonishing amount of government bonds to kind of pick the economy back up again. Now, what they need is for the interest rate to stay low, because if it doesn't stay low, how is the government ever going to be able to kind of, what they're after is economy grows. When the economy grows, government starts to kind of collect in taxes and whatever else, but they're still paying at that low interest rate. So they're starting to get the money back, but a low interest rate. Now, if the bond yields start to go higher and we start to see inflation and the Fed have to react, then that's when I think we start to see something really significant change, and it's a bit of a concern. It's a strange one because it seems like we're headed for another moment, and if we sort of try and imagine what the sentiment cycle looks like, it feels like we're headed for another moment of just absolute all-out overconfidence.
Yeah. There's a whole lot of things that come to mind. Pandemic, we've got that. I don't know that we're over it, and we won't be anytime soon. The next thing that concerns me is war.
Yep.
And I can see that coming.
Yep.
Because of we've been in a trade war for so long now. Yep. Biden perhaps settles that down to somewhat. I'm not sure, but one of the very first points that you made was the debt crisis that America is in, or the US is in, can't be waved away. There's no magic wand to go tink, finish, it's over. So the bargaining power of the United States has diminished incredibly so, not just because of COVID, but because of what they've been doing for the last, let's call it, decade. I'll call it a decade. So, that comes to a big crunch point to my mind at some stage. How do they get out of that?
Yeah. Well, yeah.
Do they fight their way out of it?
Well, that would be very dangerous. I mean, obviously there's the environmental story as well, which is going to run alongside this. But I think that if you start adding things like war in, where there's extra human involvement, I don't know, mate. But Interesting you mentioned that, because really what we're talking about is the flip side of what's going on right now. Everybody's starting to get very positive and almost forgetting. I was speaking to a healthcare provider, and they were basically saying that when people get the vaccine, they think that they're completely inoculated and they're totally safe, but it's just not the case. We kind of don't know. It's not to say that they won't be, but there is a percentage of people that aren't. We see these vaccines and they're coming out and saying they are something percent proof, but they're not 100% proof. They haven't really proved that they are completely safe as yet. With the R rate coming down over here, it is suggesting that it's doing something. But then we have also had lockdown. But it's only when we start to get out of lockdown that we see how successful and how good these vaccines are. So there seems to be a lot of people that have got that they're really confident, and again about Bitcoin, the confidence and the speak about Bitcoin is just crazy. And just back to this point, it doesn't matter if I'm wrong, really. If I'm wrong about Bitcoin, if I'm wrong about the Nasdaq and whatever else, it doesn't really matter, because I think everybody can see and everybody can agree that the point that you make the most money is if you buy down here or even here, when the market is going in this direction, not when the market is going in this direction. That's what you should be riding, which brings me back again to gold. I want something where the market's going this way, because if I can get something when the market's going this way, what that suggests to me is people have forgotten the value of of whatever asset is that we're looking at. Oil exactly the same. As I say, it's up 800% this year, and the time to really buy oil is obviously when everybody else is running away from it. So I don't want to buy something when everybody else is kind of on board the bus, because then the bus starts to get really, really heavy. It runs out of petrol and everybody's got to get out and push. I want to get it when when everybody's kind of got off, and I want to get on. That's the kind of time I want to get on. So when I look around sorry, mate.
100%. I mean, we say it every day, don't we? We're buying at support levels and we're selling at resistance levels.
Yeah. Yeah. Well, the problem, I suppose, is that there's no resistance with Bitcoin. It's just like,
yeah. Well, you're gonna have a problem there.
Yeah, well, that's what I believe, mate. And this is the thing. I don't want anybody to get kind of wrong about get me wrong on this. I'm not saying by any stretch that we should be not looking to buy Bitcoin and not looking to buy the Nasdaq or whatever else. I'm really interested in that stuff, but I'm just not interested here. And I'll be quite happy to lose out. It's one of those things, you can be wrong for many, many years, but it doesn't really matter, does it? If you waited 10 years for the pandemic to hit and bought at the lows, you've made more money than all those people that were involved in all these assets for 10 years.
It's one of those things that you have to learn as a trader. It's not about being right or wrong. It's never been about being right or wrong. Never, ever been about right or wrong. It's all about managing your capital.
Yeah.
And if you can find a way in that matches your theory or strategy or whatever the case may be, then happy days. But it's never been about being right. I mean, you can forecast till the cows come home, what you think is going to happen. That's not going to make you any money anytime soon. What is going to happen is if that actually coincides with doesn't matter how you trade, if it's a technical level that you find that matches your theory or your practice, then that's when you make money. It's not when, okay, I know gold's going to $2,500, but that's not going to help you if you get in now and it goes down to $1,500. That it's not about being right. It's all about being how you control your assets, how you control the money that you've got in your pocket. That's what it's all about.
Well, and this is the other aspect of this, mate, and what you're really talking about is that how are people buying Bitcoin at $50,000? And the only way that you can suggest, or the way that I would suggest they're doing that at, is leverage. And if people are leveraged and they're buying assets like this, and it's a guess, but if people are using leverage to buy Bitcoin, then look out. It's if you over leverage yourself, and I always go on about it, but I think if you over leverage yourself, you're in all sorts of trouble, and it really just messes with your head. You just don't make clear decisions. And
Mate, put up a chart of Euro Swissy, January 1, 2015, if you wouldn't mind.
Not at all. Euro Swissy, yep.
And we can see exactly what happens if you're over leveraged at that point. Even if you're not over leveraged at that point, you're in deep SH1T.
There it is.
If you were long Euro Swissy at that point, you could well be bankrupt right now.
Yeah.
Because nothing's going to save you. Yeah. Because there's no buy orders anywhere there. And it's, what did it go, 3,000 pips or something, 2,000 pips in 2 hours or something like that.
Yeah, well, I haven't got it on the longer term time, short term timers, but yeah, this is the range. Yeah, from 120 down to 85 cents, which is a huge drop for a currency.
That took brokers out. It didn't just take people out. That took brokers out.
Yeah.
That was a fierce thing, and it can happen.
Yeah.
And these are the things we need to keep in our mind.
Yeah.
There's no such thing as this can't happen. Anything can happen at any time. And that's why we need to protect ourselves. That's why we need capital management. We really do need to protect that. Now, if you speculate and you get lucky, that's exactly what happens. You get lucky. I can't put it any other way.
Yeah. Long-term
investment or trading is where we need to be.
Yeah, I totally concur. It's there's no doubt that is the case. Yeah. Just while I remember as well, mate. I think you've mentioned it already, but just a reminder of everybody that Paul will be on tonight. Who's this?
Yeah, I don't know. Oh well, Shukri's just head and shoulders above whoever it's going to be, but I don't think so, because I think it's to do with ATW strategies that they've been trading.
What, the show tonight?
I think so.
Okay. And
but I don't know. I mean, it's a wonderful thing and a wonderful milestone, but I believe it's somebody who's been trading the ATW strategies.
Oh, of course it is. Of course it is. Yeah, which we're going to meet the first $1 million trader, right?
Yeah, absolutely.
And that time, what time's that?
I thought you'd know. I think it's 8 o'clock. I think
8 o'clock.
But, I mean, it's all over social media everywhere. So
okay, yeah, pop into that, guys. 7 p.m. Sing. So in about 2 hours. Okay. Yeah, 7 p.m. Sing. So yeah, I thought it might be something like that. But yeah, so 7 p.m. Sing tonight. Check out the YouTube channel or the Facebook channel. I think there's a few different ways to stream it, and you will meet the first ATW $1 million trader, and I guess
so. I haven't been booked for the interview, so it's not me. you haven't been booked for the interview, so it's not you.
No. I wonder whether it's Shukri.
Don't think so, because he's trading his own stuff. He's not. Well, I don't know.
Yeah, he is. Yeah, he's. Oh, okay. Helen's just.
Helen, if you're right, I absolutely hope it is, because
I do too. Couldn't be a nicer guy.
Yeah, and he went through a whole hell of a time. So yeah. I hope you're right.
Yeah, it would be amazing. That would be it would just be just a brilliant story. Just a brilliant story. And yeah. Well, we'll see later on, I suppose. Don't want to give the game away too much, but yeah, he's a very open character, so he will be sharing exactly probably some of the ways. Anyway, he'll be sharing some of the ways that he managed to get that done.
I don't know. He hasn't told me, Giro, if he's reached the mill. I don't know.
Yeah, I mean, do you know what? It's one of those things. This is from trading. It's not like millionaire. We're not talking about the millionaire within the company.
It's a trading account. Yeah, absolutely.
Yeah. Somebody's that's been trading an account and doing it. So,
and I'm going to share with you a not so secret. Everyone in the room, there is not a hope in Hades that I will reach $1 million trading. You know why? Because I would never put that amount of money on the table that would
Yeah.
risk me losing whatever it took. But I'm really interested to know what sort of account this guy has used or lady has used to actually achieve that $1 million in the account. Fascinated.
Yeah, it is, mate. It is fascinating. Well, as we look at the charts here, mate, the FTSE 100 is proving to be a pretty resilient beast at this stage. Here we go.
That's on a rally. The pound's going through the roof at the moment.
Yeah, it is. It is interesting. I mean, it's I wouldn't really call it a rally, but that's a pretty good, well, pretty nice looking bar, isn't it? A nice engulfing bar there, right on top of resistance. So this is a sell zone. There's no question that is a sell zone and a really nice kind of selling price as well. I mean, this is finally really where you'd want it to be. Let me just check the barometers and see if there's a trade.
Can I tell you my buy entry, by the way?
Yes.
Well, it's right on where your dot is, your third dot. That's my buy level right there.
This one, yeah, that makes a lot of sense. Right. Well, I'm just looking across the grounds here, and yeah, it's a little bit of weakness out there. The best performer right now is the industrial metal stage, but there is a bit of weakness. Not much, but there's a little bit of weakness in the FTSE 100, which would suggest that this area will probably not go. It probably won't go through here. I think that there's enough to suggest that if you want a quick trade to the downside, I think there probably is one right here.
Mm-hmm.
I don't know whether people want that or not, but that's certainly what this suggests. Yeah, it doesn't look like it's going through, and a decent price actually, because if it pops up, you could just come straight out of that one without too much danger.
Before you push off, quick answer for Jure on your take on the Brexit.
Too early to call, actually, Jure. I was thinking about that this morning. Who's going to come out of it best, but it's too early to call, and I'll tell you the reason it's too early to call is that we're still kind of clearing up the mess with the pandemic, and we don't really know what the policies from here on in are going to be. We haven't done enough trade deals, really, to suggest that we're going to come out of it well yet. But they may well transpire. My suspicion is that it will be the UK. I think the UK will probably do better out of it, and the reason for that is that the UK, the Euro bloc relies on the bigger players making sure that the guys, the smaller guys, are propped up, and really you're kind of left with Germany to a degree. You could argue France, but you're kind of left with Germany. So Germany sitting at the top of that tree, I think that could make quite a few people feel a bit quite a few nations feel a bit uncomfortable. So I think it will probably end up being the UK. If you were to kind of, I don't think either of them win, but I think if you were sort of like going on a who ends up doing better out of it, who's under more pressure because of it, I would suspect it will probably be the EU. I think the UK could probably shave a bit off its output and still be okay. I think the EU may struggle to do that, and I also wonder whether we might start to see another nation or two possibly pushing back and maybe threatening to leave as well. So yeah, it's a great question, mate. It's a really good question, but I wonder whether at this stage where I sit right now, I think it might be the UK that does better.
There you go.
Yeah.
Awesome. You've got to get out of here, buddy. Otherwise,
I do indeed.
You'll be absolutely sacked. We got Buckley's are getting together over the weekend. I've got full commitments today, tomorrow, Saturday, and Sunday. So we got to catch up at some stage.
Yeah.
And get this journal done.
Yes. Whenever you can I will be around, mate. But yeah, maybe we leave it to the next weekend. I think as long as we can get it done before the end of the month, that'd be fine.
12 days to go. No, it's bloody February. 11 days to go. Is it a leap year?
I don't know, actually.
Should I hope so. That gives us 11 days instead of 10. Either way, we'll get it done.
28th. It goes to the 28th.
Right up. Happy days. Have a good one, buddy. Have a good weekend, and thanks for the week. We'll catch you on Monday.
Fantastic stuff. All right. Have a good one, guys. See you then.
All righty. I'll take the screen and update. See if I can actually find a position to take on the smaller time frame. I don't think I can, because I've been having a look whilst Ash and I have been, or whilst Ash has been having a little bit of a chat. Nothing's really changed at the end of the day. I want to explain this one again quickly to those of you who aren't or weren't in the room at the time. We've got a short placed underneath this bar here. It's really playing a false break of the breakout that we've seen here. Now, I don't necessarily expect that will be the case. This could well go very hard to this level here. And if this breakout is genuine, then I think that will be the case. Now, it may not happen today, won't happen tomorrow. If it does, holy dooly, something's happened. But it could happen week, 2 weeks, don't know. The point is, it's either a breakout or it's not. And if it isn't, and that's the whole point of the exercise here, then the buyers are going to be wrong at this point here. So that's why I want to be in here and targeting this area here, because this is a beautiful trend line forming, and I see no reason why we can't go back to that confluence area. So that's the reason I'm in CAD Swissy. Well, I've got the order on CAD Swissy. Now, I'll add to that. If we came back into here and put a lower high in, so retested the top of that range, the rectangle, then I would probably move my entry from here to there, or at least make a second entry, because that would be the point where we start to go south, in my humble opinion. So that's CAD Swissy. Do I want to trade on the short-term time frame? No, because I've got no idea yet whether that's going this way or this way. No idea. Euro CAD, we are pretty much exactly 100 pips from TP1. That may sound a long way, but we started, where were we? That's the trade. We're about halfway, aren't we, from entry to TP1. So there's absolutely nothing to do here. Of course, we're awaiting that TP1. And I said when we took the trade that it might be Christmas before we actually get a result on it. And that may well be the case. Look, we're getting positive swaps, so it doesn't really matter. We can just hang on here. If it's Christmas, then the positive swaps will actually be pretty cool. Aussie US dollar. Okay, we're free trading this, having taken TP1 at 77.76, which is, surprise, surprise, exactly where we are right now at 77.77. Do I want to set a TP2? And I said this when we took the trade. I think the answer is no, because if we get through this high, I don't think there's any doubt in my mind that we're going to here, which is, in the high 80s. So I don't think there's any need to take a TP2. I think we just keep the stop loss where it is. A little bit vulnerable, yes, because I'd much prefer that it was here, but I also like free trading. So if it did come down to here, I think that would provide us with another opportunity to get long. So I really don't have an issue here at all. I think we're headed this way. And if we can stay in this trade, happy days. If not, I think we can pick it up again. So that one, just leave it where it is. If you're not in Aussie dollar long, I've got no way. Well, I do have a way to get into it, but it needs to come down to this level here. So it needs to come back to here, find support again, hopefully before the trailing stop, and then get back above and retest that area. Then I think you've got a trade on your hands, but not before. Wouldn't want to be entering here. Aussie Kiwi, we got into that yesterday. Yes, yesterday. We finally triggered into that yesterday with that big bull bar. Look, same applies. I think we're free trading this, so we've got no issues. Again, I'd prefer the stop loss was here, but you know, free trades are free trades, and this target area here around about the 108.30 mark, I think is eminently achievable. We've got a fairly strong signal here, to my mind. Even go to the weekly chart and you can see it. Got a left shoulder here, a head, and a right shoulder here. Now, I know it's out of context, but if you take the context of a big double bottom here, higher high, higher low, higher high, lower low. It's not that I dislike lower lows in that context, because what's happened is all of these punters here who were long have had their stops kicked from underneath them. And now we've come back and retested that exact area there. This is a launch pad for me. I didn't get in on that, obviously. I would love to have got in on that. Well, it's not true, because I think we got a better entry, to be fair. We traded this bar here. And the reason we traded this bar here was because it's so unusual. We were flying here on Aussie Kiwi, and we gapped up, came back, closed the gap very quickly on Monday, but they couldn't sustain it, right? They couldn't even come down to the weekly pivot. So that's when we placed the order long there, stop loss under here. Then we got this bar here, which was confirmation for mine that this area was a rejection area. And now I think we're in pretty good shape. Anything can happen at any time, as you know, but gee whiz, I see this 108.30 area as a pretty good target. So those are the two we're pinning our hopes on, Aussie dollar and Aussie Kiwi, for the next couple of days. I'm also keen on pound Kiwi, but not before we come back to here. We've got to come back to this trend line, and that confluence area appears pretty much, yeah, look, it could be there. Love to see price come back to here, break below this level, then get back above it. Then I'd be happy to trade long, but it's not there right now. Dollar Sing, we traded short, was it last week? I think we got into it last week. Yep. And finally we got a TP1. Took a long time, but we got a TP1, and that's all we got. I think our TP1 was about here somewhere, and then bang goes your mangoes. Put in another beautiful bar here that I would like to trade, but I think there was a better way to trade this, and it wasn't Dollar Sing, because Dollar CAD, to my mind, has better credentials, and that's what we're trading at the moment. But if you like Dollar Sing to the short side, beautiful candle. Got to get your entry underneath the monthly pivot though, but I think there was a better way to trade it. Did I miss TP2 here? No, didn't quite hit TP2. I don't think it did. 39.20. We're 8 pips short. That's pound US dollar, of course. If I'm trading pound US dollar and not on a breakout, I think I'm waiting for a bigger pullback than what we've actually got, because this has just been on a tear. Interesting to have a look at this. What's it reacting off? Is it reacting off the weekly pivot? Bounce here, bounce here, bounce here, then the retrace. Yeah, look at that. See, monthly pivot. Pivots are great. Pivots are really awesome. So it's working. And that's my point. My point is this. We haven't got a test of the weekly pivot yet. So it doesn't preclude me from going long, but I wouldn't want to trade it long on anything but the breakout trade. And that's exactly what we're doing at the moment. I see this coming back here, right? Take that as you will. As I said before, it's not about being right. It's never been about being right. It's all about how you manage your money. Helen, you were asking about the silver trade, and can't remember. Is that the reason for the silver trade? I'm not sure what the reason was that we were talking about. The reason for the silver trade is nothing more than a technical scenario, right? Let me explain to you why. Or two reasons. One is the potential reward versus the low risk. And the other is that there's a technical setup. Because the pivot, yes. Massive double top, absolutely. But look at, I have to go wider. Look at this from a big picture point of view, and I can't drag that across, unfortunately. What is the trend is the question. And this is the criteria that I use when I trade weekly charts and turn them into daily charts. The criteria is, what is the biggest pattern that I can find on a chart? Where's it telling me that the market's going? And frankly, this one's very hard to read, but I do see this skyrocket in 2010. Got no idea why. If I think about it, it'll come to me, but I've got no idea right now why that happened. But anyway, whatever it was very, very quickly engulfed by this bar, pulled back off the lows, and there's no question, but then put in a significant lower high and another massive bear bar. And since then, we've been traveling down. Now, what drove this to this level here and gave us this high? That's the question that you need to ask, or that I need to ask. And the answer for me was, or is, still is, COVID-19. So COVID-19, look at the time frame, January 2020, right? So into February 2020, up. Let's bring this into perspective. Have we got a vaccine yet? Well, there's rumors of a vaccine maybe. And then we get something called Reddit and these crypto geniuses, or that little group of people who drove silver back to and here's the point for me, back to this high. But they didn't drive it through that high. How's that? Why is that? To me, when that happens, I go into logic mode, and logic tells me that if all of that weight of money, if there was such a thing, and the whole world went apeshit at the time and said, oh, they're manipulating this and blah, 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 it only went to the high that was created by COVID. And since then, well, not a lot's happened. And look, I'm not saying for 1 second that this can't go sky high. Of course it can. But when I think about it, all I see is this mob who entered the market and drove silver to this level only managed to drive it as high as there. Now, if we then think about why silver went to that level, it was because of COVID and the fear, et cetera. And here we are again at that high, but now we've got COVID, and I'm certainly not saying this is the fact, but it's on the run, right? According to the scientists, we've got vaccines that are able to control it. If that's the case, then this fear should be curtailed or contained or reduced, if you like. So therefore, my logic brain says to me, this has got one way to go, and it's not that way right now. It has to be that way. So the potential reward that I see, if I look at this chart, is for a pretty small risk. And I'm trading this in micro lots, right? Because I've no idea if I'm right or wrong. Got no idea. I think I'm trading, I can't even remember. Maybe it's 100 pips or something like that. If I'm risking 100 pips, I can potentially make 13,000. That works. That'll do me. Sorry, that's not. See, I can't work it out with silver. What's that? I don't even know what it is. $12.40. That's how much I trade these commodities. Let's say $12.20. See, I don't know. Let's say it's $12. Let's say it's $13 of risk. And we're looking at, no, it can't be. See, I don't know how to work it out. That's how smart I am. Because I never trade these things. I don't know how to trade these commodities or anything. But that's a shit ton of money that we're going to make here for very little risk, in my humble opinion. And that's why we take the trade. It's not about, okay, I'm forecasting silver's coming down to here, but I totally see the possibility that it can. And if it does, we can make a shit ton of money out of it. That's all. Simple as that. Sorry. Yeah, that took a long time, but I hope it kind of makes sense to you. Aussie CAD, dollar CAD. Dollar CAD, I think I said this one to you earlier. That's the order that we've got. And, you know, the same thing applies. The logic comes in. It's not got a lot to do with what I think about the US dollar. And everyone should know that I hate it. I think it's just a dog and shouldn't be anywhere near where it is. But I've got a technical setup here. That is a rejection of the weekly pivot. If I go to the bigger picture, we're in an absolutely dramatic downtrend. And if I go to the big picture, we've had phase one off a double top. We've had, and that's the issue I've got, have we really had a lower high? Question mark. Phase two, tiny retrace. I'm looking for phase three, minimum down to here. It doesn't always happen, but, you know, there's reason why I'm doing what I'm doing. So if we can find a little bit of effort in that from the other people in the market, then happy days. Away we go. Righto. There's nothing to do on the smaller time frames. I'm not interested. For silver, every dollar move in price, you make $50 with 0.0. Oh, we could be rich then, right? Thank you, Lewis. I really don't. I'm not interested because I'm never going to trade silver. It's just not going to work for me. Well, sorry. Never say never. Never say never. But I take your point and thank you for it. Really appreciate it. Short-term trades. Yeah, look, not interested at the moment. I think you guys have, or I've told you guys how I work these days, and it's all about I do a watch list at the beginning of the week based on the weekly chart. And if I find something that works on a Monday or a Tuesday that coincides with that, happy days, then I go to the daily charts and I add to that watch list throughout the week on a daily chart. I'm really not trading short time frames at the moment because I just simply don't have time. And it's a whole lot easier for me to dedicate 2 hours a day. I do an hour in the morning, an hour and a bit now, although I'm going over, I always go over, don't I? So that's it, guys. That's me for the week. I will update you on the Aussie Kiwi, the dollar CAD and CAD Swissy trades through Telegram group. If you're not in that, guys, and you wish to be, then I think there's a link underneath us here somewhere that you can join that Telegram group if you so wish. Lewis, you're welcome, buddy. Helen, thanks for the input. And I'm not sure we answered every question, but I wish you all a wonderful weekend and we'll catch up with you on Monday. Have a great one. Bye-bye for now.